And I'm sliding in. There I am. Hi, Brendan Cunningham here, the real estate doctor here at EXP. We're the Real Realtors. We're bringing the real story. This is Matt Paul. He's going to tell you all the things that you need to know about real estate but are afraid to ask. And we have Steven Placke. He's going to talk about
That's right.
10. Did I say it right, Steven? Good.
Perfect.
Right.
It means Smith and whatever. But having said that, let me put myself in there. Okay. All right. Can you see us? I feel like I'm out.
No, you're good.
Okay, good. We talked about a few things before we get to Stephen. Things that are going on in the market, and I saw a couple of interesting statistics. Phone calls, people reaching out to real estate agents, are they more this year or less than last year?
More for me, at least.
Up at minimum of 20% across the board, all 50 states. Some a little bit higher, but interesting, 20%. That's significant.
Yeah, it's good.
Okay?
Yeah.
People are coming back. Elections are over. People saying, okay, fine, I may have to pay more money, but I'm going to have to do what I have to do. We talked about some other things recently, different. I'm on various committees have to do with the environment, and I hate it when they come up with these abbreviations. They came up with the idea. Stop with the abbreviation.
Oh, yeah, the VOC.
The VOC.
Yeah.
The volatile organic compounds.
There you go.
Because everyone knew what that was, I'm sure, right? And the irony of ironies is these volatile organic compounds that may be in your basement. 90% of them aren't even organic. It's like paint. Paint isn't organic. I can't eat paint.
Yeah.
But they just put it all in there. So there's all kinds of things. And I just came from a different committee that had to do with lead. A lot of lead out there. Got to get the lead out. And there's a website that a lot of our customers and clients, as well as realtors, would be interested in. GetTheLeadOut.gov, I think it is, or .org. Get the lead out. Just go to the site. Interesting stuff coming down the pike. There's 580 locations that have been cited in the general Buffalo area, 80% of which are in the city.
That all have had high lead counts.
High lead counts,
Yep.
yeah. So, and it makes sense because most of the housing stock here is
Pre-1977.
really pre-1977. Most of them were built like between 1900 and 1920. I got two houses that are like that. But let's talk about other things that have to do with real estate that can help you. And one is a wonderful gift that's been given to us by the government, believe it or not. They got one right. And it's been around for like 100 years, more than 100 years, since 1921. It's something called a 1031 tax-deferred exchange. How you can defer your real estate tax that you might have made like a profit.
On an investment property.
Only on investment properties. Well, what does an investment property mean? As long as you don't live in it. That's what that means. Okay. But I'm not the expert in this, but I will defer to Stephen, who is the expert on 1031 tax-deferred exchanges. Stephen, take it away.
Thanks, Brendan.
You're on.
Appreciate the ability to speak with you and Matt about 1031 exchanges. And you're right, this is a gift that the government's given to us. It's been in the law basically since 1921. The more modern version came around in 1954, but it's a very powerful tool that investors can use to keep capital in their pocket and not have it go way back to Uncle Sam.
So how does it work?
Yeah, so a 1031 exchange is a type of tax deferral tool that investors use, and this can be done on commercial property, this can be done on residential property, but it does have to be held for business or investment use. And when you sell one of these properties, you're typically used to seeing, taxes come out of the sale when you file for that year. This can include capital gains tax, depreciation recapture tax, state and federal level taxes, the 3.8% healthcare tax, all of that starts to hurt a little bit. And what the government decided to do in the Revenue Act in 1921, and then again in the Internal Revenue Code in 1954, is to provide investors the ability to get back into reinvesting those funds from those sales without the taxes having to be taken out for that particular transaction. So it's meant to inspire reinvestment back into communities, to have more productive real estate out there in the community. And it's a tool that, again, keeps that capital in your investor's pocket to get them into bigger and better things. This can mean higher cash flow. This can mean better areas for reinvestment. It's a really powerful tool that can accomplish a lot of different purposes without having to take the tax out.
Yeah, having being an investor myself, having capital stay within the organization to be able to, reinvest, that's huge. And just so everybody knows too, this deferred status, which will go to a new property, Stephen, you can allude to, the tax is still there, but you can continue to push it down the road if you are able to do 1031s on each one of those properties moving forward.
We can do it practically indefinitely, really.
Yep.
I mean,
Exactly right. Yeah, Matt and Brendan, that's exactly right. 1031 exchanges, it's not just a one and done type of scenario. The IRS has allowed investors to utilize this tool repetitively across many different years, even until, as Brendan said, indefinitely, until you actually pass away. And the deferred status then actually terminates when you pass away. So these taxes end up never having to actually be paid by these taxpayers in a lot of cases, which is really powerful because now what you're doing is utilizing a 1031 exchange as an estate planning tool. And instead of handing the government taxes, hundreds of thousands of dollars in taxes over the lifetime of your investment process, you're able to hand that to your beneficiaries in capital. So it's a really powerful, really useful tool, and very important for investors to know that this option is available if you're selling something to buy something.
Yep.
What's interesting is there's a term out there that we hear a lot. We've been hearing it a lot in the last election cycles. Generational wealth. Okay, you know what? One would think that this particular topic really only pertains to high rollers. If I don't think I'm being, I think I'm being accurate when I say, listen, high rollers are all over this strategy. I mean, that's why they're high rollers. However, it's not just for the high rollers. It's for people that are maybe just have a couple of units, maybe a small thing, but it's for people that, I don't want to say are just starting out, but that are they could be relatively small investors and take advantage of this.
Yeah, through trusts and all different legal options that you can do.
I mean, is that accurate, Steven?
Absolutely correct. One of the beautiful things about Section 1031 is that it's available to all different types of investors, from the small to the big. Our role here at Equity 1031 Exchange, we're a third party that the IRS requires to be involved in these transactions. We'll probably talk about some of the rules that investors need to be aware of in this conversation.
Yeah. Okay.
Yeah,
but
one of them is to utilize.
They're not impossible rules.
No.
Yeah.
Oh no, there's really only about 5 main rules that you really need to be aware of in order to have a successful exchange. But our role as a qualified intermediary, we touch exchanges all the time, both big and small. We've done everything from like a $5,000 lot to a multi-million-dollar airport. So you're right, like a wide range of investors, folks who are just starting out to folks who have been in the game for their entire life, are able to use 1031 exchanges to be able to reinvest back into their communities.
Yeah, that's amazing.
Yeah, and I always thought it was interesting. The one of the terms that was confusing to a lot of people is, well, they have to be like-kind investments. Well, what does like-kind mean? It could be really anything. So I thought the easiest way to explain this is, listen, as long as you're not living in it, because now it's personal and it's residential and it's you. But if I have a residential property and I'm renting it out and I want to exchange that with somebody's got 500 acres in Atlanta, that's a like-kind exchange, even though they look nothing alike.
Yeah, exactly right. We get this question all the time. Folks who are wanting to switch from, say, commercial over to residential or vice versa. They're like, well, is this like-kind? Section 1031 does reference in the tax code like-kind property has to be utilized in a 1031 exchange. And all that means is exactly what Brendan says, is that if this is real property that is used for business or investment use, something that you're not using personally, because personal use does transform the type of property that we're talking about into personal. This has to be business or investment use. If it's land, if it's an office building, if it's a multifamily, if it's single family, if it's a condo, it all can be purchased and sold through a 1031 exchange to get those tax benefits. So a lot of folks are using this to hop over into new strategies in order to diversify their portfolios or to try their hand at something new in a different area.
Yeah. So basically, if it's income generating, you don't, you own it, you don't utilize it for your own personal business or your own, personal family, then that could be, subjected to this exchange if you were to sell.
Essentially, yes. The main thing that we're looking at is, are you utilizing this for personal gain? And personal gain can mean, yes, you're living in it personally, or it could be, I have family members that are living in this that aren't paying me fair market value rents. That too can be considered personal use. But I mean, just as a small thing, we work with doctors who own the office building that they operate their own business in that do qualify for a 1031 exchange. So you can operate your own business within the property, you just can't live there. So that's a determining factor for an exchange, but a very important rule about personal use. So glad that we could tackle that. Yeah.
Yeah, definitely. That's good.
But on the other hand, when you talk about income producing, a lot of times people don't want to necessarily buy vacant land as an investment because, well, generally people don't rent out the vacant land. I mean, you could, but if you don't, well, it's just sitting there and hopefully appreciating. But since I'm not living on it, it's investment property.
What happens if there's a land lease with a farmer? You
Yeah,
know,
that could happen.
Right?
Yeah. So, but a lot of times people just buy it and they sit on it and they figure, well, it's better than a CD because you can't build on a CD. So.
Exactly right. Yeah.
Yep. And Steven, we've worked with Steven here, out of Western New York. We've done a few transactions already this year, successful transactions. We're working on one together. So, Steven's outside of the state, but can work anywhere within the U.S. And he's been a very, very useful resource for us here. So, there are other options in the area. If you're in Western New York and you're looking to do a 1031 exchange, reach out to Steven, reach out to us. We'll get you connected.
Let's go a little deeper. There are a couple of rules and there's some timelines. Without getting too far into the weeds, just give us some of the timelines.
There are only 3 days that you need to have in your mind when you're talking about a 1031
We're trying to keep
exchange.
this real easy for everybody.
Yep.
Yes. Yeah. So there are 2 deadlines that start on the same day for a 1031 exchange, and the clock starts when you actually close on the sale of your investment property. If you're selling first to then buy a new property, your clock starts when you close on the sale of your property. Now, prior to close, you do need to have a 1031 exchange established with a qualified intermediary. Super essential that gets set up ahead of time. The qualified intermediary will intercept those funds at closing so you don't trigger a tax event. But day one of your 1031 exchange is at close. There are 2 deadlines that start on that day. The first is a 45-day deadline. The 45-day deadline is the identification period. And all this is the IRS requires that you telegraph the pass, so to speak, of where these funds may potentially land by day 180. So what you have to do is work with your qualified intermediary and tell them by day 45 after close what properties you're considering purchasing to use those funds for. So you basically have to identify ahead of time what you're looking to buy. And then 180 days after you close, you have to eventually close on one of the properties, if not all of the properties that you identified by day 45. So telegraph the pass by day 45 and make sure that everything is closed on by day 180. Now, that is the maximum amount of time that is allotted, but we've done 1031 exchanges within the same week. You don't need to wait 6 months to do an exchange. You can hop out of one property, hop back into the same property, do 1031 exchange, but you're at least allotted 6 months to finalize that process.
Yeah, and in our situation too, we were going to do a reverse, so that's not the only option. There is a reverse exchange if you're in a market with low inventory, like we have here in Buffalo, and
a lot of markets.
Yep. And if your client doesn't want, to try to wait until they find the right property, or they want to find the property first and then sell theirs, that's what we did. We engaged that way, and then I think I'm pretty sure our client just flipped, and we're going to simultaneously close in the normal allotted 60-day time, which is the average here for a lended loan, and so we were able to utilize both options and then flip because the timelines worked out.
All right. So
Exactly.
when you talk about 45-day period to identify the property, more specifically, does that mean I have to enter into a bona fide contract of sale for the identified property? Or just say, I think I want to buy that one.
In so many words, that's exactly right, Brendan. You do not have to get under contract. You do have to hand us something in writing so that we can have a date associated with that declaration to show that you're in compliance to the 45-day rule. But there's no sort of documentation or agreement that has to be entered into by day 45. You just basically have to point to it and write down the address.
Yeah, can we, and you don't even have to do a specific address, right? Is that correct? If you say, I want to relocate to this town, can you just say it's going to be in this town, or does it have to be a specific property?
Yeah, so this is a very important question, Matt, and getting some clarity on this is going to help your listeners understand what requirements there are for the 45-day period. The requirement for the 45-day period is specific to a particular deeded property or a particular address. So you need to be able to point to a property that is specific, so that we can draw the line between day 180, what you closed on by day 180, to what was declared by day 45. For example, I cannot say that I want to buy a property in Atlanta, Georgia. I need to be able to say I want to buy 115 Main Street in Atlanta, Georgia zip code at this price is what is being asked of right now. So that's the requirement. You can't just generally state the area.
Are you there?
Technical difficulties. Sorry about that, Stephen.
And we're back.
Yes. Yeah, I don't know. We buffered and froze. Sorry about that.
We're gonna do a little editing and pasting for what we lost. So.
Never happened.
Yeah, nope, never happened.
It never happened.
So yeah, you were mentioning, you can't just name Atlanta, Georgia, specific, as the whole, the city, right?
Yeah, exactly right. So the requirement for the 45-day period has to be like address and property specific. I can't just say I want to be in Atlanta. I have to say what address in Atlanta I'm looking to purchase. So that requirement, that level of detail is important. And that's why it's important to work with guys like Matt and Brendan very early on in your process. If you're selling and you're using Matt and Brendan to buy a new property, contacting them and getting them involved in the process as soon as possible so that they can give you a variety of options, some things that may be important for you to look at before you get to that 45-day period, is really going to put you in a good area to succeed for that requirement.
A lot less stressful too, I would imagine.
Oh yeah.
Right? Because if you don't meet the requirements, you can no longer do the 1031 exchange, right? If you miss one requirement, you're out.
That's right. So we mentioned the two deadlines, the 45-day period and the 180-day period. If any of those deadlines are not satisfied or met within that time frame, unfortunately, you are not able to pursue a 1031 exchange. And to put it further, what you do end up buying by day 180 must be on your list, your 45-day list. You can't just buy whatever property you want and disregard your 45-day list. They have to be tied together.
Okay, good to know. Good to know.
Yeah. I did one a long time ago, and I was selling a condo project, and I had 2 dog units left. 2. No one wanted them. And somebody had a 1031 tax-deferred exchange deadline. They bought both units and connected them. Okay, and I said, it all works, but it wasn't for that. She would have lost her deadline, she would have had to pay taxes, and I would have been stuck with those 2 units. So,
Yeah.
But yeah, it's a wonderful, wonderful tool, and the magic is, frankly, is once you get your ducks in a row, once you find the property, you put this little clause in your contract saying this property is being sold subject to a 1031 tax-deferred exchange. You put the magical words in there, and that's really all you need to do to keep the process in play.
Yeah. So, and you can do multiples.
You do multiples.
The deal that we're doing together, Stephen, the buyer of our client's property, is also doing a 1031 exchange. So. It's a lot of people in general just I don't know if they fear it or they just the fear of the unknown. It's just something that's just too much to take on, but it's really quite simple, and you can stack these, and it's nothing like as nerve-wracking as a contingency to me, like a closing or a sale contingency.
Yeah,
it's just these are
much
investors.
Easier.
They know what they're doing. The ducks are in a row. Having the mediator, it's not a mediator, it's an intermediary, right?
Qualified intermediary.
Yeah, so the intermediary is facilitating every step of the way. They're great communicators, so you really you know what's going on every step of the way. So, and I know that our deal right now is right on track. So,
yeah, it's a cool thing, and a lot of times you'll see people when they're selling properties, multis in our area, they'll say, and this property can also be purchased with this property or this property or this property. When they put that as a package, when they tell you that, it's like, wow. Why don't we just set this up as a tax-deferred exchange and everybody wins?
Yeah.
But I think one of the reasons why people don't do this, this is a stupid reason, is I think a lot of people don't know about it.
Yeah.
And a lot of investors, and I'll even include them, and I'll say they're savvy investors. They don't know about it. Or for some reason, they think it's so complicated. I don't think I can do it. It's not that complicated.
Mm-hmm.
And again, if you have, obviously you have a qualified intermediary, he makes everything look easy. So
That's right. And it's important to work with folks such as Brendan and Matt who have experience as well.
And Steven.
There are a lot of hands in this pot. You have to work with the right real estate advisor. You have to work with the right qualified intermediary. Everyone has to row in the same direction. And that's something that we try to do our best at. Our role as a qualified intermediary, yes, is to hold cash. Yes, is to do the tax record keeping and provide documents so that when they file their taxes, they satisfy requirements. But it's mainly keeping open lines of communication throughout this process, making sure everyone's rowing in the same direction. So you're absolutely right. It is not complicated. It's actually quite simple. You just need to have the right people in your corner.
Well, that's it, because you deal directly with the IRS and get them everything they need and make sure everything's met. So that right there is a huge help and a relief for most people. So
right, we hand you everything that you need to file. That's not a problem for us. I mean, that's part of the duty. We demystify that process. We hand you exactly what you or your accountant needs to file. So it's pretty simple for you after that point.
Yeah, it's streamlined. That's great, Steven. Well, thank you.
Again, we can't get into all the minutia of the whole thing, but understand if you have qualified, good people handling it, it's a fairly straightforward process. But you need to know about it. So if you want to know more about 1031 exchanges, you want to know more about real estate in general, or you want to just say, I love you, man, that's okay too. But in the meantime, do it.
Yeah.
Do your big close.
Well, please like, follow, subscribe. Thank you for tuning in. Let us know if there's any questions or if you want us to elaborate on this topic. We know that it's new to a lot of people. Steven, thank you so much for your time again. Please let us know how the best way to contact you. I know people can contact us as well, but in case you're outside of the area and you want us to directly contact Steven, go right ahead, please.
And remember, tune in next time and you listen to these two guys because we are those real estate guys.
But go ahead, Steven.
All right. Best way to contact us is to find us on our website. Getequity1031.com is the best way to get in contact with us. You can start your exchange process from there. But I would always suggest just work with Matt and Brendan as well. They have straight lines of communication to us, and we'd be happy to work with you guys through them as well.
Perfect. Beautiful. Thank you again, Steven. Appreciate your time. Take care. Talk to you soon. Bye.